What's up, everybody? Michael Silva here. You're watching the Daily Stock Market Brief. In today's video, we're going to be using technical analysis on multiple different indices, indicators. We're going to be looking at commodities, the dollar, and the yield. And then I'm going to wrap it up with the conclusion. So I'm going to try to move quickly through these charts because I got a lot to go over. And this is going to help determine, what might be taking place next in the stock market. I do these videos Monday through Friday, so if you like this type of content, if you haven't done so already, smash that like, smash the subscribe button. It is greatly appreciated, and thanks to all the current subscribers and people that interact with my content. I really do appreciate it. Just another note, in the description below or in the comment section, you'll have access to my chart deck. I also post it on my website, and then you can follow me on social media, Instagram, Twitter, for more intraday type alerts. Let's get into today's show. All right, everybody, welcome back. We're going to first start off with the sector spotlight. Why do we do this? Well, this is really just to help determine, what's moving the market. And right now, what I want to point out is the top three. We have energy, real estate, and financials. So very interesting. Energy sector has been getting beaten up for months and months and months, but now we're starting to see it move up the chain. It's been at the top performer here relative to the SPY for quite some time now, 3-4 trading days. I can't remember the exact amount. And then we have utilities, interestingly enough, one of the draggers, the laggers in these sectors. This is just for today. You can see down 1.96%. This was up 1%. Let's get a visualization of what this looks like. This is relative performance, and you can kind of see the tail on the moves. And really, it breaks it down into 4 sections here. We have improving, leading, weakening, and lagging. And then you see the head and then the tail that follows. So very interestingly enough, you see the XLU. You can see the long tail moving into the lagging category. So this is a underperforming sector relative to the SPY. And then we have the XLE, the energy sector, from this improving section that has been doing quite bad. Now, like I said, this is daily, looking at 7 trading days, sliding way up here into the top right corner of leading, doing very good. You can see XLB, which is the materials, and XLC, which is communication services. Those are filtering and getting weaker as we see. Then we have XLI and XLF. That is the financials as well as the industrials. Let's look at an XLE graph, a chart, to really help us see what's going on. Well, we had this falling wedge, a bullish pattern. We broke out to the upside, really getting some steam to the upside. But what I want to point out here is where we're moving into this overbought territory in the RSI. And now we just got to look to the left of the chart. When we look to the left of the chart, it happened right here. That was kind of a blow off the top of this pattern. And then we sunk lower. It happened over here. When we sunk lower, it happened over here. We sunk lower. So the chart is telling us, this is a bullish breakout, but we might be running into some levels of resistance. Probably not the time to go long right now. Here's the BKX. Now we're looking at the financials. The BKX is the largest 24, 25 institutions. This is the monthly time frame. I want to point out, up 17% for the month. Absolutely incredible month. And we pointed this out on previous market breaks on a big picture note, where this kind of looked like a head and shoulders pattern on the monthly time frame. Well, now we're seeing this big boost to the upper portion of the right hand shoulder, kind of coming into where it got rejected previously. Now we still have a lot of time in this month, so maybe we get rejected and start heading lower, or maybe we break out and this pattern is no longer relevant. We will be finding out here soon. Here's the KRX. This is the regional banking system, banking index. The smaller mom and pop banks of the economy, I guess you can say. And what do we see? Well, all these red circles on the chart, that's when the Bollinger Band, it extended to the upper side. So we did here, got pullback, 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 pullback. Now we're at the upper portion of this Bollinger Band again, reconnected with the 5 EMA, and the RSI right here is in that overextended territory, just below it, to be quite honest. We're at 67, so we're not quite overbought yet. Then we have a negative divergence on the stochastics as well. Probably not the best time to go long, but it could still have room to go. We broke out an inverse head and shoulders pattern that we mapped out, and we also broke out of a ascending triangle pattern. So yeah, we might have some resistance up ahead around 92.50, but we got to keep an eye on it. Like I said, it's probably going to have to take a breath here soon. This right here is going to, you probably heard in the news, hey, we're getting out of the rotation out of growth to value. All these big tech stocks rotating out of that and finding value. And you could see that because some of the energy stocks were providing a lot of value. They were beaten down stocks, but they probably shouldn't be worth that little. Perhaps, right? So we're seeing that rotation out. And this green line, this is on the daily. You're looking at 30 trading days. Look at value leading the way, and you can see this rotation taking place from growth to value. This is kind of a, an ongoing sort of look, but I just wanted to point out a visualization that you can see right now value stocks are kind of leading that charge relative to the DJUS. Let's look at some indices. First, I'm going to show you the S&P 500 on the daily time frame. What do you know? Well, we had a little bit of a gap down, kind of an indecision type candle. We closed the gap below us. Okay, we pointed that out. I'll show you on the 2-hour time frame when I talked about that. And we reconnected with the 5 EMA, found support there at that level. Bulls still have charge. The charge right now. We haven't closed below the 5 EMA yet, so the bulls have the momentum here. We have a bullish pennant right here on the VIX. Now keep in mind, the VIX is inverted, so technically this is a bearish pennant. If it breaks out to the upside, that can send this stock, or sorry, the SPX, the S&P 500, up higher. So it's still saying that, hey, we have some room to go. What I want to point out is VIX future expiration, I think I'm saying that right, is tomorrow on Wednesday, and then we have OPEX week as well. So sometimes we get crushed, meaning that this could very well break out. So we'll keep an eye on that. Then we got the S&P 500. Posted this one on Twitter. This area of support, I remember, just a little call out when we said, it broke this, it filled the previous gap. As you can see, it broke flush through, filled this previous gap. And then when we're up here, that's when I notified it, hey, if we break through this level of support, we can go fill that previous gap. Boom, fill the gap, and we're still above 3,600, above the 20 period. So the bulls have complete control as of this particular point in time. Here is the S&P 500 on a smaller time frame, the 15-minute time frame. What I want to point out here is the symmetrical pattern taking place, right? And it's at the upper range. So maybe we get denied and come back down, or potentially the market wants to just gap us out of this, which it's been known to do, these gap outs of areas of resistance previously. We had this rising wedge, which is bearish. We pointed that out on a negative divergence just the other day, and boom, we broke down to the upside, but quickly recovered after filling that gap. The Dow Jones, obviously we've been keeping a close eye on this, vertical movement to the upside. Had some scare today, some big red looking day, but the bulls stepped up as soon as they reconnected to the 5-period moving average. Do you understand why the 5-period moving average, why I always have it on a chart with the Bollinger Bands? Because it helps see short-term trends, and it does act as support. Boom, perfect touch, basically filled this gap, almost there. I think there's a little bit of room left, but then we kind of created this hammer type doji looking candle, whatever. It's basically saying, hey, the bears were here today and the bulls were here. But what I'd like to point out, we have a lower high and a lower low, which is not the greatest sight, but we're still in a position to potentially move higher. Let's look at the indicators. The VIX, bear flag, we're monitoring that. We're getting crushed to the downside. It was up 1.16% today. Not too much movement. It basically opened where it closed. It looks like it wants to start breaking down from here. We'll see. Not too sure. Here's the NYMO. We'll point right back out. This is a breadth indicator to measure breadth of the market. Double top. We're getting overextended to the upside, right? We're getting some kind of like hesitation. We might be taking a breath here. It's going to be interesting to watch kind of what takes place here. Now, keep in mind, sometimes when we get these big movements to the downside, then we get these big bursts of breath that really lift us a lot higher. When it came down, right, on this negative breath, then we had this big burst to move us higher. So maybe on the next leg higher, we got to look for a big burst of breath. So maybe if we start getting a huge burst of breath here, maybe that will move the market higher. But as I see it right now, we're at a double top on this specific indicator. Last time it hit a double bottom right here and we saw the move to the upside. Maybe we see the inverse take place. S&P 500 on the daily time frame right here. We're looking at two indicators. This is the 200 period moving average, means 89% of the stocks, almost 90% of the stocks are above the 200 period moving average. That's overextended. That means a lot of stocks are going to be moving into areas of resistance. That means other stocks they're just overextended overall. There's going to be a large majority of them that are going to be overextended. Then you look at the 50 period one, it's almost 85% of the stocks. When they both reach these levels at the same time, we've seen pullbacks happen in the past. You can pull this chart up if you want to take a closer look, but I'm going to keep moving on. Here's the CPC, smoothed over 10-period moving average. I use this as a sell signal, right? When it crosses below, that warns us. When it crosses above the red line, that's when that's the quote-unquote sell signal, where you got to just, take some profits off the table, as I've already mentioned plenty of times, or move your stop losses up and just be very careful. Now, what I don't typically use is this as a buy signal, but it can be used as a buy signal. I was hesitant because of the extension seen, but what do you know? When it crossed above, that was saying, hey, a buy signal might be taking place. Crossed below, that's when the buy signal activated, and it crossed right there. If you just move down, it was right around this area, and boom, we saw this flush move to the upside. So, now I'm just kind of waiting to see if potentially we're going to be crossing back below and back above, which could indicate that quote unquote sell signal. As I see it right now, it's kind of neutral at this particular point in time. Here is the AAII matched in with the weekly time frame of the S&P 500. We've talked about this on the bullish sentiment, or when we talked, it was the movie Think Like a Bear. And what I want to just point out here is, yeah, we're going into the second week right here, where the survey is still in a pretty overextended, very, very bullish sentiment type market. So if you look at this from a contrarian standpoint, and you match this in where the current price action is, you can say, okay, everyone's bullish. That means the bullish trades are probably coming to an end, where we can see some breadth in the market, like where it can consolidate sideways or just take a little breather to the downside. I guess we'll see here really what takes place, and I'll talk more about my thoughts on all of this in the conclusion. Commodities, gold, still within this symmetrical triangle, falling wedge, I don't know, whatever you want to call it. We're at the upper range below the 50. It doesn't look like it wants to really break out here yet. We'll see, if the dollar keeps moving down, which we'll go over, maybe we get that big move to the upside. Last time we broke above, it was complete fake out to the downside. You can call this a bear flag, and if it breaks down this bear flag, I would be looking at this as far as a target range goes, to buy into some more. That's the 200 period moving average, previous support, and this lower trend line as well. So probably a lot of confluence of support in that area. Silver, we redrew out this kind of descending triangle. We got rejected from the 50 period. Maybe we come up here and retest this. I also drew in the potential for an inverse head and shoulders, where if we break above this neckline, we really might start seeing silver start to shine, potentially even going up to 30 to even higher, 35, 36 if it breaks above that. So I'm going to be keeping our eye on. But the real shiny commodity here, if you want to call it a commodity, I don't really know, is Bitcoin. And I say I don't know, not to sound completely dumb, but I really don't know. So I don't know much about Bitcoin other than what I can see on the chart. Huge shining moment for it. Obviously, these last 7 weeks is the weekly time frame. We broke out of the symmetrical triangle, back tested, and then boom, parabolic move to the upside. Obviously, the RSI is just extremely frothy right now at 83.08. Looks like it wants to go test the all-time market high, but the unfortunate thing is it would be nice to see this take a breath and consolidate a little bit before continuing to move higher. The higher this thing moves, the bigger the contraction could really be. So you can see that. We saw these big moves to the upside, big breath, move up, big breath, move up, boom, big breath. So, where can it potentially pull back to if it reaches up to 20,000? Well, I would say 14,000 would be a good area where it acted as resistance right here, all the way to about 12 to 14,000. That could be a good area to re-pick up some if you do believe that the price will continue to go higher. But yeah, vertical moves like this, they're going to take a breath. So, don't buy in at the wrong time. Does it have legs to move higher? Yeah, but it's probably going to have resistance at the previous all-time market high. If we break above 20,000, that's something to consider, that if it holds that level and consolidates up there and builds a base, hey, that might say that we're going to be starting to see even more legs to the upside. So that's something also to consider. Oil, this is light crude. I just really want to point out, yeah, we've been seeing a nice run up here, but we're still within this kind of risk range that we've been trading within. So what do we need to see? Well, we need to see a break above 42.50, potentially even 45. Let's just call it 45, and then we could potentially see oil really have some legs to the upside. Let's look at the dollar. Dollar on the monthly time frame, head and shoulders pattern. We broke down to the downside. I usually show you this on the daily, but I wanted to give you more context to kind of ingest. Bear flag at the lower portion of this bear flag, and we've been trading in the channel for the last couple months here. And basically what I'm trying to say here is if we break below 92, that's going to send us lower, potentially even down to the 200 period moving average right around 87.50. Okay, so watch out for that level to the downside. That's going to be good for other various aspects of the market like gold, silver. And then if we start breaking above, keep in mind when this neckline could still act as resistance, but if we start getting above to like around 96, it's probably going to put a lot of pressure on the equities market. So that's something else to consider. Yields, let's talk about that. Really, it's still following this higher low trend line. We got extended, we have higher highs, higher lows, it's trending up, but now we're seeing a little bit of a breath moving back down. We're at 0.87 on the 10-year spread, kind of pulling back a little bit when it reached up to 0.8. This is the 10-year minus 2-year widely tracked. So it was, it's just something that we're tracking. This is a steepening curve, and then when it gets inverted, it has to go below 0. This is pricing in, what this really means is, the pricing in higher inflation and future growth. So are we going to start breaking below this, and we're going to have to, adjust accordingly? Are we doing a risk-off type move right now? It seems like the market wants to go risk on, but maybe the smart move is to go risk off at this particular point in time as the yields are dropping. I guess we'll see. Like I said, we're in a very interesting time right now. So let's go ahead and wrap it up with a conclusion. I'm going to conclude with just a couple of important charts that I didn't show yet. The first one is going to be the Dow Jones transport. Why am I showing you this? And why am I going to show you the semiconductors? Well, because they make up a big portion of important indices. So for example, the Dow Jones, a big part of that is the transportations, and we have this huge negative divergence. I called this out already on this smaller divergence, well, it was still big, going into October. Okay, it was a negative divergence, and then I said when it pulled back, look at the 50-period moving average for potential opportunity to start getting into transportation stocks, right? To hold this support. Well, then guess what? Boom, right up to the upside. What's going on right now? We have another all-time high negative divergence, all right? Very, very aggressive move to the upside, and it's kind of forming this is just a line chart, take it for what it is, but this right here is a rising wedge, so be very careful here. Maybe we get a break back down. We also had that take place here, negative divergence. This was a sharp move to the upside, rising wedge, boom, to the downside. Also, negative divergence here on the MACD, okay? If the transports get hit and they start sinking, it's gonna bring down the Dow with it, okay? They go hand in hand, and it makes just a big portion of it. It's happened plenty of times. Here's the semiconductors. Okay, we pointed it out right here as well. Negative divergence, boom, fell to the 50 period. If you don't believe me, just go watch the other previous market briefs where we were talking, okay, it's pulling back to this 50. Now start looking at semis for potentially getting into for a long, semis that were moving into an area of support and potentially right up. Now we're seeing another negative divergence at an all-time high. Be very careful here because semis make up a huge portion of the Nasdaq. So if the Nasdaq, if the semis start going down, and maybe even tech stocks or random tech stocks too, the semis can really start helping these get, just drag even lower. So we need to be careful. Okay, so wrap up my head thoughts, wrap up, everything that's going on. What am I planning on doing? Well, first off, one, I want to preface this week. Tomorrow is expiration day for the future option, the VIX stuff. And then we have OPEX as well, all right? So this week, it's kind of just at this standstill for me, particularly. It's been kind of like that for these last trading days with this very aggressive movement to the upside. If you feel like you're missing out on a lot of these moves, well, you probably are missing out on all of these moves. Like I said in the previous market brief, sometimes markets can correct, and they can correct very quickly. So don't just jump into something without a plan. Make sure that if you are going long particular stocks, because there are going to be stocks that have good setup, so make sure that it's a solid setup and a good risk first reward trade. There's plenty of opportunities out there. Me personally, I'm going to wait for this market to find some ground, some legs, consolidate a little bit before I start putting my money on the line. I've been catching a little bit of momentum to the upside right here, but I've been doing it with just a very, very close eye because I do not want to risk my money in this type of environment personally. So that's all I got for you on today's market brief. I will be seeing you back here tomorrow. And like I said, if you haven't done so already, make sure to subscribe. I do these videos Monday through Friday, 5 days a week. See you later.